Be Wealthy and Smart, episode 1213.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to delve into AI, artificial intelligence. Is it hype or is it real? In terms of investing in it, that is, because there are different options that we have to invest in AI, and I believe these are very, very early days, and we have lots of different choices that we can look at, but maybe there are some that make more sense than others. As you know from an earlier podcast that I did, I wasn't ready to invest in AI as a standalone investment. And that's because we don't know exactly the companies that are going to be profitable yet. We don't know which ones are going to be the ones that are long-term survivors and the most successful. As an example, back in the internet days, we had lots of different search engines. We had Yahoo, we had AOL, we had many different search engines. But it wasn't until Google finally came onto the scene years later that it dominated the search space. And that may happen with AI as well. Sometimes technology takes time to shake out and become dominant. So being too specific with AI, I think, could be to our detriment. And that's why I've really waited and given this some thought before commenting on the best ways to invest in AI, which is what we're going to talk about today. So when I wrote my book, 3 Steps to Quantum Wealth, The Wealth Heiress's Guide to Financial Freedom by Investing in Cryptocurrencies, the whole point of that book was that we're repeating a cycle of the technology and internet cycle. That cycle took place in the 1990s and culminated in the first quarter of 2000 in a spectacularly huge technology bubble. But it took years for that bubble to build. And in some ways, it seems like the decade we're going through now is a reliving of that same decade where the internet came on the scene for the first time. We have so much new technology being developed right now that things are really accelerating at a rapid pace. And I believe by the end of this decade, we're likely to see a massive bubble again. But I don't think we're there yet. In fact, I think just the opposite. We're in the early phases of investment. This would be equivalent to us being back in 1993, 7 years before the bubble peaked. That's just my opinion, and that's what it feels like to me. Now, what's really interesting, this year, AI-associated stocks have accounted for all of the gains in the broader stock market. So much so that without AI, the S&P 500 would actually be down 2% this year. That is what Societe Generale said in a Bloomberg article dated in mid-May. It said, the investing frenzy around artificial intelligence has been so strong that without it, U.S. stocks would be down for the year, according to Societe Generale strategist Manish Kabra. AI-hungry investors have propelled shares of NVIDIA, which makes the chips needed for complex AI computing tasks, up by 96% this year. They've also powered rallies at Microsoft and Alphabet as the tech behemoths race to add AI features to their products and services. The 3 stocks are among the biggest contributors to the S&P 500's 7.6% gain in 2023. The AI boom and hype is strong, London-based Cabra wrote in a note Friday. So strong that without the popular AI stocks, S&P 500 would be down 2% this year. If you think about it, companies that have been talking on calls about AI have been getting a speculative boost. It's akin to back in the 90s when companies would say the word .com, that they were starting a website or they were going online. It's the same kind of idea. Just saying that gave their stock a big boost. And that's what we saw with NVIDIA and Microsoft and others, where it's added literally tens of billions of dollars to their total value this year. And we're also hearing that venture capitalists are being very choosy about who they fund this year. Funds are a lot tighter than they were in the past. And they're insisting that a company that they invest in may need to have an AI component to it. So how are they using AI to be more cost efficient and productive and increase profitability? Public companies want to invest in AI so that they can tell their shareholders they have it covered. They see what's happened to NVIDIA stock and Microsoft stock because they talked about AI. So every company and in every boardroom, they're all talking about how they can use an AI strategy to boost their stock price. And what is their strategy? Again, they know it will help them operate more efficiently, which will lead to higher profits, which will lead to a higher stock price. Those companies are likely going to have to invest in new equipment, whether that is these large chips that we've seen some AI companies use and develop, such as I talked about with Cerebras, which is still a privately owned company that is on the Link2 platform for accredited investors. But those shares are already all sold out and fully subscribed. But Link2 does have another AI company that is even more interesting to me called Samba Nova. And the reason that it's more interesting to me is because it's generative AI for enterprise and government. When you talk about selling to the government, you're talking massively huge numbers. And here's what Samba Nova says on their website. This is from February 28th of 2023. Today, Samba Nova announced Samba Nova Suite for generative AI, the first generative AI platform specifically optimized for enterprises and government organizations. Samba Nova Suite is a collection of the highest accuracy generative AI models, which can be deployed directly in a customer's own environment and can be further adapted using their data for even greater accuracy. So what do we mean when we say generative AI, specifically optimized for enterprise and government organizations? The answer starts with the fundamental differences between consumer and enterprise generative AI. The reality is that consumer use cases for generative AI are vastly different than for enterprises and government organizations. While much of the viral applications for generative AI in the consumer space have involved fun content or discussions about the impact on schoolwork, enterprises and government organizations are interested in optimizing business use cases, such as their contact center and customer experience, or analyzing and processing complex documents. These are complex use cases that pose several fundamental challenges for the consumer generative AI tools that have been dominating the headlines. The first challenge is the high level of accuracy required by enterprises and government use cases. For example, a frequent area of discussion related to consumer generative AI is when the models hallucinate or make up an answer to a question because it thinks that is the correct answer. In consumer applications, this can be good for a laugh. In the enterprise, hallucinations can have a catastrophic impact on customer trust and a company's brand. The second challenge is the strict security and privacy requirements of both enterprises and government agencies. Because many consumer generative AI tools are delivered through a cloud API on a shared model backbone, there are significant data privacy concerns about sending sensitive data outside of an organization's firewall. Additionally, this data is often sent to a generative AI model, which is shared with other companies, including potential competitors. The third challenge is that generative AI will need to evolve according to open standards to find long-term success in the enterprise and with government organizations. This is required both so these tools can be integrated with the existing technology infrastructure of these organizations and also to help them avoid vendor lock-in. However, consumer generative AI tools are often closed and fully proprietary systems. With Samba Nova Suite, we are empowering enterprises and government organizations to take advantage of the full potential of generative AI to solve their biggest business and operational challenges while delivering the flexibility, privacy, and security required of modern technologies and tools. At Samba Nova, we think that the generative AI revolution is just beginning, and we are excited to work together with our customers and partners to discover the full, exciting potential of this transformational technology. Again, that's from Samba Nova's website. And it is still available on the Link2 platform for accredited investors. And there's a link below in the show notes where you can set up your account, get a $250 credit toward a subsequent Link2 investment, and you can go ahead and get started as an accredited investor. So what if you're not accredited and you can't invest in AI in a direct way like this in an AI unicorn company that's privately owned? What's the next best thing you can do? Well, the next best thing you can do is to invest through an ETF. But the problem with investing in AI ETFs is that they're often combined with other things. For example, one is combined with robotics. Another AI ETF is combined with quantum companies. So you're not getting really the pure play. So I don't recommend going that way. What's worked for us in the VIP experience is to go with more of the mega cap companies. And those mega cap companies have been the most successful that have been working with AI right now. Companies like Apple, Microsoft, Amazon, Nvidia, Alphabet, Tesla, etc. Those are some of the top companies that have already started implementing AI throughout their organization. And that's where I think you're going to get the most bang for your buck right now, is investing in things like that. And that's something that we've been doing in our asset allocation model in the VIP experience for the last several years. By owning mega cap growth, we are up 34.38% year to date and 41.42% for 3 years. So those are my suggestions for participating in this trend that I believe is here to stay through the end of the decade. Now, a lot of people are already saying this is a bubble and that this bubble is going to pop this year, which is hogwash. We've just barely begun this bubble. Bubbles go on and on for many years. And as I said, this feels not only like the dot-com bubble, this feels like a combination of the dot-com bubble and the Y2K bubble combined. Now, I've not heard anyone else say that, and I'm going to trademark that sentence so that anyone who uses that in the future has to give me credit for being the one who came up with it. Because think about it. AI is very much like dot-com, where you just talk about it and the value of your company stock increases. But also, there's a component where people need to make an investment in order to bring AI on board their company. And that investment is like when Y2K happened. For those of you who are too young to know, Y2K happened before the year 2000 as the calendars were turning over from a year that started with 19 to a year that started with 20. So the fear was that the banks and financial institutions did not have their internal mechanisms programmed correctly, and that it would turn back to 1900 instead of to the year 2000. So all these banks and financial institutions, and I saw this happen in real time, where banks had to buy new equipment, new computers, new software, etc., to make sure they were compliant for Y2K and to make sure there wasn't a disaster that happened when the clocks turned over at midnight, December 31st, 1999. And of course, everything went smoothly and there was no big problem. But there was a lot of fear leading up to that there would be a problem. The same kind of fear that companies will have if they don't participate in an AI strategy. The same kind of fear that people will say, if you don't have AI, you're risking your company being outdated, you're risking other companies becoming more competitive, more cost-effective, more productive, etc. And that fear is going to motivate people to invest in equipment that they're going to need to provide AI, mostly in the form of semiconductor chips. But I believe the AI bubble that is going to grow this decade is a combination of dot-com plus Y2K. You heard it here first. That's my original thought. I haven't seen anyone else mention that. I really believe that is what we're seeing, a combination of both. And that means this is going to be a very big trend for many years to come. Now, one of the data points that we have is from Goldman Sachs, who said they believe that for S&P 500 companies, that they could increase their productivity and expand their profit margins by about 4% in a decade following widespread adoption. They say that over the next 10 years, AI could increase productivity by 1.5% per year, and that could increase S&P 500 profits by 30% or more over the next decade, according to Goldman Sachs senior strategist Ben Schneider. He says technology companies are immediate winners, but the real question for investors is who are going to be winners down the road, which is exactly what I have just said as well. He also said the real source of optimism now is productivity enhancements through artificial intelligence. And that in 1999 or 2000 during the tech bubble, it would be very hard to envision Facebook or Uber changing the way we live our lives. Yeah, I totally agree with that. But why I wanted to come on today was just to plant my stake in the ground about AI, about the fact that it's a longer-term bubble than people are probably going to realize, that it is something that's going to start with the big mega-cap tech companies, and that's where I recommend investing. Or if you're an accredited investor and you can invest in an individual company like Samba Nova that is developing AI for governments and enterprises, or like Cerebras, which is developing the semiconductor chips, the very large book-sized semiconductor chips, not the postage stamp semiconductor chips that we're used to, but the big AI book-size semiconductor chips. These are opportunities that I think you're going to want to get in on earlier rather than later. And as your wealth mentor, I wanted to bring this opportunity to your attention. This would be a great time to come into the VIP experience and have more updates and support around this incredible investment opportunity. If your financial advisor hasn't given you an AI strategy for your investments, that's definitely something you need to consider. And you can find details for the VIP experience in the show notes below. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.